Hey, what's up guys? This is Mike here with Media Signals Trading, and in today's episode we're talking about time frames and candlestick patterns. So two basic concepts, but you definitely need to know this for chart reading. So candlesticks is the most common type of graph patterns or graph formation that traders use. You might see the line, chart quite a bit, which is this, and doesn't give as much information as candles, but I'll go over what line charts cover later in this video too. So let's go over time frames first. So once you're on TradingView, this is how you go to the time frames. You'll see many different options here. There's days, weeks, hours, minutes. So all this means is we're going to talk about this pertaining to candlesticks, right? So whatever you select here, each one of these candles will reflect that much time and price action. So if I select 4 hours, very simple, one of these is what happened in 4 hours. If I select one of these, or 1 day, every one of these reflects 1 day. If I select 1 minute, each one of these is what happens, every single minute. So pretty simple. In general, when you look at time frames, if you're just looking at a fresh chart, you always want to start with a higher term time frame. So if you ever see us type HTF, that's higher term time frame, LTF is lower term time frame, right? So you always want to zoom out. So because, if you look at a big perspective on the weekly, we've gone up a lot, right? But if you look on the daily and you zoom in, we've gone down a lot. And then if you look at the 1 minute, we're going sideways, essentially. But we're actually in a massive 1 minute uptrend right here. So, but a 1 minute uptrend does not trump a daily downtrend, if that makes sense, right? So, as a general rule of thumb, higher term time frames have much more weight than lower term time frames. So I hope that makes sense, right? If an asset like Bitcoin is going down on a daily basis, that's more powerful overall than if you zoom in to the last hour, if it's going up on the 1 minute basis. So I hope that makes sense, right? So typically what I use for higher term time frame is the 1 month, 1 week, and 1 day. The lower term time frame is 4 hour, 1 hour, 15 minute, and 1 minute. If you're trying to scalp an entry, sometimes 5 minutes. So if you want to write those down, month, week, day for a higher term time frame, 4 hour, 1 hour, 15 minute, 1 minute for a lower term time frame. Each will have their own uses. So let's go over candlestick, what candlesticks mean, right? So candlesticks is very easy. The most common way that people will display them is green or red, right? So a green candlestick, the solid part, okay? So the solid part of every single candlestick, this right here, is the price action between where price opened and closed, right? So what that means is if you're talking about a 4 hour time frame, when the first second of that 4 hour hits is where the candle opens, and the last second of that 4 hour time frame is the close, right? So that's what we mean by open and close. So in this candle right here, a green candle means price went up. The open is always on the bottom part of the body. The close is always the top part of the body, right? So the solid part is the body. The little lines, we call them wicks, or sometimes in traditional land they call them shadows, right? So on a green candle, the open is the bottom of the body, the close is the top of the body. If you look at a red candle, the open is the top of the body, the close is the bottom of the body. When in doubt, here's a little cheat code. Hover your mouse over it, and in the top left corner, so for this candle, or whatever candle I'm hovered over, if you look on the top left here, whatever candle is currently selected, here's the open, the close, the high, and the low. There's a little cheat code for you. So what the wick means is, now that we know the candle opened at this price and it closed at this price, what the wicks mean is somewhere in between that 4 hour time frame, price came all the way down to the bottom of this wick and came all the way up to the top of this wick. Doesn't have to be in that order, but just at some point that happened. And in order, if you want to zoom in and find out what happened, so price open around here, okay, and then actually I think this is the candle right here. So price open around here, went down, this was the lower wick, came up, wicked up, and closed right about here. Okay, so pretty simple. So that's basically, when you look at all these confusing candle patterns, if you don't know what these mean, it's actually very simple, right? There's four parts of the candle that you need to know: where the open is, where the close is, and where the highest and the lowest price of where the wick action happened, right? So where it touched. So again, let's just pick random candles and do a quick review. Okay, so this red candle, open on top, close on bottom, lowest price point. This random green candle, open right here, closed right here, and then at some point went up here, some point went all the way down here, right? So that's the basic definition of candlesticks. Couple of things that you need to know, right? So this is, let me show you guys this. I can upload this into the group, but I mean, there's all these types of candlestick definitions. You know, you have, you know, I'm not the type of person that tries to do all the textbook definitions, because you know, you don't need to memorize like the 20-something whatever candlestick formations, what they mean, and try to get all those definitions. I like to use things on a practical basis, right? So a lot of these textbook definitions is, you know, what you learn in the classroom, but you'll probably never use out in the real world of trading. Like, for example, right, and these are all arbitrary too. Like, for example, do you need to know that so here's the other problem. A lot of these aren't you know, picture perfect definitions, right? So for example, this is the doji. Do you need to know that this is called a doji to know that there's indecision right here? Probably not, right? The open and the close were right next to each other, and there's long tails. So I'll teach you, and this is called the shooting star. Do you need to know that this is called the shooting star to know that price is coming down? Probably not, right? Here's a hammer. Do you need to know that it is called a hammer for it to go up? Probably not, right? So I'll tell you the psychology behind candles, and this is all you need to know instead of definitions. You can read through the whole PDF, spend 10 hours, whatever, that's up to you. But the body of the candle means wherever the open and closes. If there's a big candle body, that means there's acceptance, right? You open the price and then you close the price, you know, close to the top or the bottom of where that candle is. So like this candle, so the open and the close was, the body of the candle was very wide, little wicks, there's acceptance, price goes up. If there's large wicks, that means price was not accepted, right? Price was rejected. Like this long wick right here, price came all the way down, had a long lower wick, right? And then price proceeded all the way back up to $42,000, right? So wicks in general mean rejection. Body, large body closes mean acceptance, right? If you have, you know, if you have long wicks both ways, that's indecision, because you technically have rejection from both directions, right? So if both directions are not being accepted, that's indecision. So it could go either way. Some people literally only trade candlestick patterns. I do not, but some people do find a decent amount of success. You know, you can do your own research on candlestick patterns. I just don't find that they have a high hit rate in cryptocurrency land. Okay, so you know, do you need to know the definition of this candle to know, hey, look, we had an enormous wick where the body of the candle was very little? If you saw this right here, you know, the open was all the way up here, the close was very close to the open, and you had a long wick all the way down to 30K. Do you need to know the definition of this to think, hey, it's probably going the other way because we got rejected, right? You had a long wick on this candle. Do you need to know the candle definition to know, hey, we're probably going the other way, we got rejected, right? Same thing here. And this candle, you know, you have acceptance. So it's like, hey, we're probably going lower. We did, and we have rejection. Now we're going back up, right? So the psychology of this is, and right here, super big lower wick. We go the other way. Surprise, surprise. So the psychology of this is more important than memorizing all of the definitions. Um, you know, you don't need to know what a gravestone is. You don't need to know what a dragonfly is. You don't need to know what a long-legged doji is. If you want to learn all those, write them down, be my guest. But that's all you need to know about candlestick formation or candlesticks in general, how to read them, and the psychology behind reading, you know, bodies and wicks and their proportions and ratios. So you'll get used to it to where you can just eyeball candlesticks and you know, get a general idea of what they're printing you, but always use that in confluence with other tools. So I hope that helped, guys. If there's any questions, let me know in the Discord. If you're not part of the group and you want to know how to get some next level education or get the trade setups and signals I give every single day with about an 80% win rate, join ninjasignals.trade. Until next time, guys. See ya.